Test, test. All right, I think we got it. Let me know if you hear my voice. Yeah, I'm not sure what that was about. It didn't want me to come on. It was all stuck, which, I don't like to see. Um, we've got a very crisp picture tonight. Look at that. My upload must be pretty powerful. Doing okay. I'm doing okay. Thank you. Wow, I'm almost like that can't be real because it's never that clear. All right, so moving forward, I wouldn't build it up so much. It's pretty simple. So once again, for people that are brand new to the group, wow, that's instantaneous. Oh my lord, what is going on? Um, for people that are brand new to the group, there's some important information here if you want to screenshot that. So we have a Facebook group. You should be in that group. If you're a member of IML as a trader, you should be in that Facebook group. That's our group for scans, forks, and Fibos. There's a Telegram channel, not used heavily just yet, but I've got a plan for that. That's the link to join the channel. Obviously, you can't cut and paste from a picture, but that link is in the pinned post of the Facebook group. So get to the Facebook group, you'll be able to get to the pinned post. The Pitchfork course, there it is. And there's the user ID and password. When you get prompted for it, that is case sensitive. So if not already, take a screenshot of all that, please, so we can move on. All right, so tonight we're going to look a little bit at forks from the perspective of options on entry. Now, bear with me. I have to do a few things here. Somebody tell him he needs to refresh. I've got to do a few things here administratively to make sure we're on the right page and we can move forward. So with that being said, I want to remind everybody that I am an educator. I am an educator in this capacity at IML. I am not an investment advisor. In order to give investment advice, one has to be appropriately licensed in the United States to give or provide investment advice. Investment advice gets pretty tricky. It includes things with specific models and specific trades, including how, when, where to enter and exit. That is considered investment advice. I don't care whether you're on a demo account. I don't care whether you have your own money. If I tell you when and how to enter a trade, that's investment advice, and I need to be licensed for that. And I'm not, so I can't do that stuff. So I know that sounds a little confusing, but here's what we're going to do. So my goal is to educate you on the trading options that are available. In this case, we're talking about pitchforks and the kinds of pitchforks and the options with those pitchforks. And I'm going to talk about the pros and cons, but ultimately you're going to make the choices, from or of the parameters and techniques for entry. So there will be some things that are essentially black and white in some of the things I'm going to show you. But again, it is not the only way to enter a pitchfork trade. There are many options. Now, if you happen to emulate some of the options I show you and you follow them to the T, let me tell you what cannot happen. If if I show you a very specific way as an option to enter a pitchfork trade, what I can't have is you going to the group, posting a picture of your pitchfork, doing the exact same trade, and saying, is this correct? In the scheme of things, that's considered investment advice. So if you're told how to do it and you do it, then you've done it right. I hope you understand what I'm saying. Now, many of your educators here or elsewhere, or gurus at whatever places you guys may interact with for your trading advice, may do any and all of that, and I don't care. But if you remain attentive, you're going to gain the knowledge to properly understand how to optimize various trading strategies and techniques, and to do so at your election, and not under the advisement of me or anyone else. Welcome, welcome, welcome. If you're here for the first time, I will put up at the end of the session some contact information that you missed because I already put it up once. All right. So I'm kind of like, stay punctual. I like to reward the people that are here on time. And we all have things sometimes that continuously hold us back, and I understand that, but it's not fair to the people who are here on time, even if you're late accidentally. But I will give you the information at the end. So once again, I am an educator. I'm not an investment advisor. Does anybody have any questions about that before we proceed? Okay. So a couple of things I want to talk about. Yep, you're right, Zoe. So one of the first things I want to talk about in the realm of forks, little catch up, if you will, catching up, not catch up as in ketchup, but catching up, is remember at the very beginning, and hopefully you guys understood that because we cover why we would want to trade pitchforks. And the reason we trade pitchforks, first of all, is it's a new paradigm. We can have very tight stop losses. Tight stop losses allow us to have our risk into a tight area, which means when we start making profit, we make more profit than anybody else. Okay? So the guys, again, that have 50 pip stop losses, and we're in there with our 10 pip stop losses, when it goes the same distance, I don't care what distance it goes, we're going to make 5 times the profit they make. If they're using a 100 pip stop loss, whatever distance this goes, we're going to make 10 times the profit they make. That's important to understand. If you don't understand that, then doing the work of learning pitchforks is going to be gone. You're not going to do the work because you just don't understand the reality. You have to understand the math. My traders know this. Do the math. That's what trading's about, understanding the math. Otherwise, you're like a ship at sea without a GPS and a map. You're lost, and how do you know where you're going? All right. So our money management is tight. Now, through some events, some of which under my control, but most out of my control, I have to change up a little bit about what I'm doing and how I'm doing it here the next couple of nights. So bear with me. So we have to know the reason why we want to trade pitchforks. The second thing is pitchforks have a real benefit, as you've witnessed Monday. And if you haven't seen Monday's class, go for it. You got to get there. Pitchforks isolate and allow us to apply this technology of making 5 times, 10 times the profit, in some cases on 4-hour moves, as much as 15 times the profit in the same scan trade. This is substantial. Forks do not limit your trade opportunity. They increase your opportunity for profitability. Let me say that again. Pitchforks do not isolate and reduce. They isolate the scan. They don't reduce your opportunity for trades, and they don't reduce your opportunity for pips. You get more pips trading with pitchforks. Trading those scans with pitchforks. You will have better knowledge as to which pitchforks to not take. You'll have much better understanding of when to take the scan trade, and which scans not to take. And when you take them, you'll be able to make them with much tighter entries and make this kind of additional profit. So all the reasons in the world to learn pitchforks. If you're brand new here, you need to go through the recorded sessions that are there. I believe we've already lost the first one. In the future, I've already arranged, we will have the entire course in the IML Academy. And when I get it there, I'm going to try and make the first several sessions here equivalent added to that. So essentially there'll be a course that references pretty much everything, and then that'll allow us in this room as we move forward to look at charts, to look at trade opportunities, to look at setups. Okay? That's what we want. So you can copy pitchforks and use them to help you. But we've got to get a foundation before we can get there. Now look, I'm going to tell you, I've been at this a long time, guys, and I can tell you by far, the vast majority of traders, and I'm talking high percentages, are very impatient. That's one of the things, Raymond, I have to wait on for some specific reasons. It's available, but I'm not going to give it out just yet. So we have to understand our motivation for trading pitchforks. It's about the money. And one of the things you'll hear me talk to a lot is not to trade in conflict. Not to trade in conflict. That means don't do something that you take a stand on and then you're going to trade the opposite of that. No. One of the things that I see, and I know those who are helping with the forks, Tim, Stephen, Zoe, Theo, a lot of forks are coming in with pound yen. And that's an old school mentality, because the pound yen is chased for only one reason. What is that? Why is the pound yen on 75% of y'all's charts? There's the answer right there. Big pips. Perceived big pips. It moves more than others. Well, what you have to understand then, and trading in conflict, would be to continue to see 80-90% of the charts all pound yen. If you make 300 pips on a pound yen trade, I could make the same amount of pips, the same amount of money, so that's 300 pips, and that's going to equal X dollars. I could make those same X dollars with 30 pips on the euro. Maybe as little as 20, depending on what time frame you're trading. On the Aussie, on the euro. I have no bias towards currency pairs. Let me tell you my only bias on the chart. Wicks. Wicks are not good. Wicks are good only if they're singular and only if they're reaching to a support and resistance line. Other than that, wicks are not good. They are not your friend. They show indecision. They show, if I've got a wick that does this, what does that mean? What that means is price had been here. It smelled some sort of, in this case, support down here. And support was so strong, the price ran away with its tail between its legs. It was the little army squad who sent out a scout, and he came back and said, no, we're not going to cross the river here. The enemy's too big on the other side. Let's get the hell out of here. So it's not good. Now what happens, so that's a good thing if you're looking at that support level as a potential trade entry. That's a good thing. But what happens when the subsequent candle does the same thing? Wait a second. Did somebody not get the memo? That price support was too strong. You don't need to go down there anymore and check it. And another candle comes down there and checks that. Guys, that is not trading opportunity. And oddly enough, whatever, throw your own percentages on it, 65, 75% of the time, that's exactly what the pound yen looks like. Some of you millennials call it the GJ. In the old days, it was always pound yen. That's not trading opportunity. And the only reason you like the pound yen is because it does those 300 pip moves, and you can get by not dealing with these wicks because I'll just put a 150 pip stop loss on this thing and I'll be safe. And then when you make the profit, you're making pennies per pip because you had such a big fat stop loss. So you are operating in conflict if you're trying to learn to trade with pitchforks to make precision entries and to be able to take that scan trade and make 5, 10, 15 times the profit over everybody else doing scan trades. You're operating in conflict if you desire all the time to go after the pound yen, because most of the time the pound yen has big wicks. Ooh, careful. That means there's a lot of indecision because this squad of Marines or whatever keeps sending their little scout out, and he comes back, and it's like they don't trust him. They have to send another scout out, and they have to send another scout out. Bottom line, there's a lot of indecision when there's a lot of wicks on the chart. And what makes this even worse then, as you turn right around and you got wicks going in both directions off every single candle that's on the chart. 65, 75% of the time. And it's like, why? Why do you want the yen? Oh, because it moves big. Well, guess what? I can make 10 times the profit without the wicks. Give me a pair that doesn't have wicks. I trade the pound yen when it doesn't have big wicks, when it doesn't have tons of wicks. When it has lots of big wicks and tons of... Big wick is what? What would you define a big wick? A big wick is when I look at the body of a candle and the wick is as big, if not bigger. There's your typical pound yen candle. So don't trade in conflict. Don't come in here to learn how to take tight trades, and then on top of that, you want to consistently try and draw your forks with pound yen. That's operating in conflict. It's okay it's okay to trade the pound yen. It's okay to do pound yen pitchforks. Just don't do it when it's got big forks. You guys, listen to me. Don't worry about the chat box right now. So item number one is look at all the pairs you want to trade. Look at the majors. If you're going to be in exotics, okay. But you're going to want to narrow your selection down at some point. I don't care that a scan shows up on the scanner and it's on some pair that you normally don't trade. Zoe's okay. Thank you, though. Appreciate your interest. Zoe's okay. She was just joking with me. So, guys, look at the pairs, see the kind of wicks they have. I think that's self-correcting. I don't need to belittle that point too much. No, that's all right. I appreciate the interest. All right. Let's talk about another thing that happens. So we've got a pitchfork. And excuse me, I can't draw with this drawing tool that I'm using. I can't copy lines, so I have to try and do my best to get the angle and the distance, somewhat correct. So when it's not perfect, just have a little tolerance with me, okay? So I've got a pitchfork, and price does this. So obviously we came in from a swing low. We go to a swing high. We came down to another swing low. Swing high, swing low, go back to the previous swing low. So we got a traditional fork set up here. We know we've got an 80% chance of hitting the median. We like to see it do a couple of things here. We'd like to see it bounce. That'd be nice. If it goes through, what we're probably going to see... No. I didn't say we're not looking at wicks. We are looking to draw pitchforks from the highest point. But there's a difference if my candles oops. Thank you. Tool just blew up on me. Hang in there. There's a difference when every candle looks like that versus a candle that looks like that. There is tremendous indecision here. And then frequency is every 2 out of 3 candles look like this. Or do I have some candles that just have bodies or little 1 or 2 pip wicks? Yes, we're going to put a pitchfork on our wicks. There's a difference in kinds of candles. Look, this is something to be self-evident. Just go look at the pound yen and go look at any other pair. 9 times out of 10. Let's go back to our pitchfork. Now, where we're getting to here is the difference. Yes, long wicks, indecision, especially when it's long wicks in both direction, and it's long wicks in both directions on almost every candle. Exactly, in a row. For hours and hours and hours and hours and hours and hours and hours. What's the book called? I don't know. Okay, so man, I wish I had the opportunity to shut the chat. So here's what I'm going to tell you. Japanese candlestick patterns only work in the old paradigm. They don't work in the new paradigm because the time it takes for a 4-hour candle, even to do something small like an evening star, could be 50 pips before you know it's an evening star. Oh, look, it's a reversal pattern. Yeah, and now you're making 2% on your 300 pip move or 4% on your 300 pip move versus 60%. So, well, because what happens in the chat is people say things and then other people buy into it, and now we have an issue because we're talking about something that doesn't work in the new paradigm. Well, I'm glad I watched the chat because I don't want things being said that are contradictory to what I'm teaching. So, what you can't do, guys, I've said this in the first few sessions, you can't bring your old paradigm trading to this class, to this session. This is a new paradigm trading session. Scans, Forks, and Fibos. The name of the Facebook group is Scans, Forks, and Fibos and Profits. We're talking about super profits. And when we get super profits, we smoke anything else that's in the marketplace. Any other trader, any other system, even similar systems that use the old paradigm. Because there's simply not the same understanding of math as we're going to go through. So you have to leave that stuff behind, and you know what? Your ego doesn't like it. That's why you want to keep bringing it up. Because if you've spent time and you've invested money and you've been trading 2 years, 3 years, 5 years in the old paradigm, your subconscious mind and your ego doesn't want to switch to the new paradigm. Anthropologists have a big problem because we have solid proven evidence of humanoid footprints beside and inside of dinosaur footprints. And they've proven them to be the same age. So how do you explain that? Did dinosaurs last a lot longer than what we realized? Or were there some humanoids back when the dinosaurs were around? It's impossible to have a dinosaur print with a human foot. But an anthropologist who's a college professor who's been teaching 50 years and written 10 books on time periods of dinosaurs and humanoids, they're going to resist because they don't want their life work to be thrown away. And that's true with trading. If you learned in the old paradigm, you're going to want to bring it forward. I'm telling you, if you do, it won't work. Just go back to the old paradigm. Go back to making 2% on a 200 pip move or 150 pip move. And I'll tell you how fast you're going to burn out, because those kinds of gains are not going to keep you happy. Especially when you look left and right and you see somebody on that same 150 pip move make 30% on trade number one. Your trade, their trade. And then you start compounding the results. This is why you want to learn pitchforks. It's why you have to leave the old paradigm behind. We know this swing low, swing high, swing low. We have our trade. There's an 80% chance from that swing low, per Alan Andrews, that we're going to get to the median. Several things can happen there. It can bounce, come back down. It can go through and go to the opposite side and bounce. It can go through and prove the strength of the median by checking the median before it goes onward. This is always, by the way, a super test. I think I've made this evident in a couple of posts or on somebody's post here recently. That's a real strong test that you got the median in the right place, which means the angle of the fork is in the right way. But let's talk about another condition. Because as you're learning to draw forks, guess what? Your RAS will not catch this. Your RAS will not allow you to see this because you're too busy drawing the fork based on what I've showed you. And yet, this is part of forks. Oh. And that is when it leaves the swing low and it comes up and it turns around here and actually comes down and does something like this, and then comes on up, and we see it maybe hit the median and come down and then take off. And up here, it stops here, and then it starts coming down. So essentially what you have here is a condition that Alan Andrews saw, and he said you can still use your fork, but we're going to use something called sliders. So we're going to make parallel lines to this upper parallel and drop it down, and you'll notice what happens when we do. When we look at that distance between the two, it's the exact same distance. It's short over here. We essentially have like a phase shift of the pitchfork. So he said you can trade sliders as if they're part of the pitchfork. And what happened here as I drew it is I kind of suckered you in with that median hit, which isn't a median hit. It is per the fork, but it's not per the shifted fork, because the shifted fork is like that. So what happened here is it actually went through the shifted fork's median and then came back and checked it and then took off. And likewise, the breach at the bottom just looks like a breach. It's that same phase shift down. Now, a slider is tradable on the second hit. A trend line is tradable on the third hit. A traditional fork is tradable on the first hit. But a slider, we need to have proof at that slider point, even though we might have other examples in the pitchfork, we need proof that that's really there. So on this first move here, that is not tradable. But if price comes up to that equivalent line again and is being turned away, that becomes a trade. So all we have is a little phase shift. Those are called sliders. Interestingly enough, when I first started looking at sliders hard, I noticed when they were repeating inside the fork, in other words, they were occurring in more than one spot, they were occurring at the same spots. So this is when I first started doing Fibonacci inside the angle of the fork. And that's how we ended up with Fibonels, is because there was a high percentage of time these bumps were landing on Fibonels. And so rather than requiring the shortage here, drawing a line and waiting for it to come here, we pre-built the lines in, so this potentially could be traded. Okay. We're not trading Fibonels in what we're doing right now. Fibonel touches, unless you can see the slider action like I've drawn it here, and there's consistency in the sliders throughout the fork, an individual hit to a Fibonel helps us adjust a best fit. Other than that, we're not going to use it for a bounce trade. Let me say that again. We're not going to take bounce trades off Fibonels. Fibonels are used when we have to do a best fit and we're swinging the median up and down to get the best fit. Fibonels can be used, and they're great tools for helping get the fork in the correct angle. Any questions on that? So now we've covered sliders. All right, so a lot of stuff from trend lines, a lot of stuff from IML Academy is good to know because it's applicable in the technical sense for anybody's trading. Where I will differ is in new paradigm versus old paradigm when it comes to risk and how you manage risk and understanding the math, because of the tools that we have. But if I have an upward channel, what is my stronger trade? A buy or a sell? Yeah, buy. And conversely, if I've got a downward trend, what is my stronger position? When I say stronger, I mean safer, has more momentum, has more impulsivity. Yeah, sells. So essentially, upward trends, we're trading bottoms. That essentially is the pro-trend mentality, follow the trend. On a downward slope, we're selling tops. Bottom for buys. That's just a general understanding of the stronger move. The trend is your friend until the bend. And we're going to trade bends. So, Let's think about a pitchfork, because at some point, and you know, we were trying to get to it tonight. I'm not sure we will, but this is, you've got to have this information before you can start trading. So we just got to get through this, because I'm going to do this, and some people are going to have to think twice about this. What we're eventually going to do with an upward pitchfork, when there are buy opportunities, one of our stop loss mechanisms, depending on time frame, is going to be a parallel line to the bottom parallel. Duh. We may have fork activity, and again, I drew these trends to be a little exaggerated, but you know, they may be. Maybe we have great pitchfork performance in here, even though it's an uptrend. Okay, so maybe we have good sell opportunities here. If the pitchfork's wide enough and we're getting these hits, then sells are okay. Any curiosity how many people know this? I've tried and failed on pitchfork. I don't know what that means. You'd have to send me 50 pitchforks before I can tell you that you actually were trading pitchforks. And also, I doubt you were trading it in the new paradigm the way I'm going to teach, because as far as I know, we're the only ones that do it. So, out of curiosity, who knows why in this move the buy is better than the sell? And don't give me an answer of the friend is the trend. Well, there's plenty of times price moves down here. What's really going on here, guys, is, and this is where you need a rounded education to eventually be the ultimate trader. You don't need a rounded education to get started. But don't be lazy. Just because I teach you some things with pitchforks, you can go and learn more in IML Academy, which will make you a better pitchfork trader. I would always suggest asking, is this technique going to help or hurt me as a pitchfork trader? You'll be able to answer that most of the time. But here's what's happening. Why the trend is your friend here is generic language that traders just, yeah, that's it, the trend is my friend. And you have to understand why. I'm going to give you the technical answer, and this just is where you have to eventually take your education. The technical answer is because the trend is up. What I'm really having here in this particular stretch at this particular time frame is an Elliott wave move that is going up. And what that means is I have a series of waves, draw them as correctly as I can. You have a series of waves for which we have two sides. We have an impulsive side and we have a corrective side. We have an impulsive side and we have a corrective side. And then we have an impulsive side. And this would be higher. I just ran out of, a little higher up here. So what that means is impulsive side is just what it says. All those big moves you see, the pound yen when it goes 200 pips on 3 or 4 candles, that's always going to be a wave 3. Wave 1, wave 2, wave 3, wave 4, wave 5. The big wave 3 is typically the biggest of the impulsive moves. Bottom line is, these are pullbacks. These are corrections. Those are corrections. And you'll learn later on in Elliott wave the parameters for the 2 wave. We know from a 10-year study, not mine, but eSignal, exactly where this has a high ability to turn around. And it does it so 73% of the time, right there. 10-year study, all markets. We know that it can go deeper, but it can go no deeper than the 2, than the 1, than the start of the 1. The 2 can go no deeper than the start of the 1. But 73% of the time, it's between 50 and 61.8. That's a wave 2. So there's a correction. But notice it's still shorter than the first wave. So if I have a chance to get pips off this moving impulsively or this correcting, I want the impulsive pips. There's going to be more with them. A wave 4, 75% of the time, it's shorter. It's not as deep as the wave 2. Here it's 38 to 50. So it's shorter. So which would I rather have? This mega push of pips or the correction that pulls back? This, if this is a 100 pip move from 2 to 3, I can expect a 40 to 50 pip move in the opposite direction. It's not shabby, but it's not the more guaranteed move. So uphill, well, no, it doesn't work with support and resistance strategy. No, it doesn't. Because a support and resistance strategy could be zones. And we don't trade zones like that. We trade precision bounces. So if I have in this pitchfork, if I have a zone that for support and resistance that looks like this, well, that was supposed to be a rectangle. I know precisely where the bounce is. If it's bouncing here, yeah, so that support and resistance zone, which normally you have no idea where the bounce is in there, we have great precision because it's banging off our pitchfork. We have stuff that will bring more precision than a zone like this. In this case, it would be called internal Fibonacci's, the top parallel, and fork Fibos. We would do a fork Fibo on this down here and generate Fibonacci-based lines from the 100% onward, and very often we'll have lines hitting on those bounces. Those are called energy points. Still somewhat precision. So anyway, upward forks. So here's the challenge in understanding all that. If you don't understand it, then this is going to be hard to comprehend. If I've got an upward fork and price is banging off the top, parallel, we have a certain reality that exists. So price is coming along. Let me do it because I'm trying to give you an entry here. So doing a sell on the top, you're going to run a deficit in your stop, and at some point you have to say enough's enough. Remember, our stop, we'll talk about what this distance is, depends on time frame. My stop is there. That's going to be a manual stop. A manual stop. I will have a trade station stop at my point of entry. Let's say this is a 30-minute trade. I will have a trade station stop 10 pips up from this point, if I could draw a straight line. And it'll be there like that. That is my trade station stop. We also call it the emergency stop because we don't want to be taken out there. We will take ourselves out manually right here. So here's the problem. If I enter this trade at the very first bump here, or the second bump, this being the first, let's get that out of the picture because I don't want to distort things. I want people to get messed up on me. The reality is, if I get in this trade and it's not taking off yet far enough for me to go into profit, to lock in at least a break-even +1, the problem is every time it makes contact with the pitchfork, which is, hey, that's another trade opportunity, or it's confirming I'm okay using that as my entry, guess what? What's happened to my stop? It's grown. My stop was originally here, and now it's here. Price pulls back down a little, goes back up and tests that pitchfork line. Now my stop is here. Well, what you see happening is the stop is growing. It's growing because we're trying to do a sell in an upward trend. Now, when we reverse things, realize we're in a good situation. Because what happens when it retests the pitchfork line? Every time it wants to retest the pitchfork line, not only does our stop move, but eventually puts us in profit. So we take our trade. At the time we take our trade, there's our manual stop. Price comes down, it goes here. Tests it again. Where's our stop loss? Now's our stop. Price comes down, goes and tests it again. Where's our stop loss now? Here. So it's still challenging our stop loss. We still may have, on a 30-minute trade, this still may be 3 to 5 pips. We haven't breached the pitchfork. We're still testing the same support line, but all of a sudden, we gained 5. We're 10 pips up, and we haven't left the pitchfork yet. That's kind of cool. So this is why sells are more fun to trade when the pitchfork is pointing down. Because even a small move and a retest of the pitchfork puts us in profit. Does everybody get that? It's just simple geometry. Remember back in the 9th grade? Mom, I got this stupid geometry homework. When will I ever use this in real life? Right now. Right now. Half the people just left the room. I got past Math 9. That's it. We lost them. See you later. It doesn't mean I won't take the sell in the upward pitchfork. It just means I would prefer to take a sell in a downward facing pitchfork. Yeah, you never got the geometry then. Likewise, what? The opposite occurs on the buy in the uptrend. It's just like a sell in the downtrend. We got our fork bottom. We've got our manual stop loss just outside that. And as price can test that fork, as much as it wants as a valid support line. Boom. Comes here. Here was our stop. Comes and tests it here. Here's our stop. Wants to test it one more time. Here's our stop. Again, third time it tested. Gee, we're 10 pips up now. Hasn't even left the pitchfork yet. Now here's the thing about being able to use this stop. See, we're going to run out of time, and it's the way it is. It's all right. Got to get this foundational down. Here's the thing about being able to take these trades. If it's a crappy fork, you can't do it. What is a crappy fork? A crappy fork is where yeah, that would be one hell of a fork. Excuse me. A crappy fork, and we've seen these, and it's okay. You guys are learning, and you guys are coming from the old paradigm, so it's understood. Those of us that have been in the new paradigm for years, we're like, oh no, they can't do this. Here's what happens. You have a fork, and you have a line that comes here like this, and then you have a candle that does that, and then you have a candle that does that, and you have a candle that's a little short here, and we look at them, and you submit them in the group, and again, I'm not picking on anybody because we all did this when we started, and you circle these as if they're good touches. Ladies and gentlemen, that is not a tradable pitchfork. Unless, here's where I turn into educator instead of investment advisor, unless you want to use, I already used red, but I have to use it again, unless you want to use, on your 30-minute chart, unless you want to use a 20 pip stop loss and make, 1/3 to 1/2 the profit that we make by having a good fork that has to the pip touches. Actually, I can't, Wesley. Some of it has to be experienced. Yes, again, one more time, the difference between new paradigm and old paradigm. And the old paradigm, you're trading big fat stop losses. In the old paradigm, the way you trade works against your psychological growth. It creates emotion in your trade. Emotion is the worst trading partner you can ever have. In the new paradigm, you don't have that. You trade more robotically. Everything's much tighter. And because it's tighter, we have the highest amount of dollars gained per pip made. So as I said, in the old paradigm, if you're trading with a 50 pip stop loss, new paradigm, we're trading with a 10 pip stop loss, same trade. We have better technology so we can do it. So there's two ways of viewing this. In the same trade, when that trade goes 100 pips, if we both put 2% into our stop loss, when that trade goes 100 pips, you've made 4% over here. When that trade goes 100 pips over here, we've made 20%. That's on the first trade. Same account size, same 2% into the trade. There's a big difference between 4% return and 20% return. And then you do that trade after trade after trade. 5 trades over here, uncompounded, we're already at 100% return on our account. 5 trades over here, you're at 20%. Not shabby, but it ain't 100%. And then that distance gets bigger and bigger because the dollars compound. No, you're never... Oh my Lord. There can be different strategies. We're not going to talk about hedging at all. There are excellent times to use it, and there are terrible times to use it. And until we know how to trade the basic fork, we just have to postpone that question. It's not part of the trading strategy. It can add pips when you know what you're doing. And we never hedge. I'll put this much of a saying, notice out there. We're never going to hedge until we're already massively in profit. When we use a hedge, it means no matter what happens, we're going to win. A hedge is never designed to prevent a loss in a trade. We only hedge when we're massively in pips. We're not there yet. We haven't even taken our first pitchfork trade yet. We're just getting set up to understand how to do it. So I can't trade. This is a non-tradable pitchfork. Now, don't feel bad if you've submitted something like that, because you have to learn. Remember, and I've heard this from, the people who've been helping, Tim, Zoe, Steven, Theo. I want to give a big round of applause to the people who've been submitting pitchforks. I don't care whether you got it upside down or what. Big deal to submit a pitchfork. Big deal to post a picture of something you did. That's a big ego buster. You've got your focus. You're trying to learn. You don't care what people are thinking. You don't worry about looking stupid. Trust me, 75% of the people in this room won't post a pitchfork because they're afraid of how they're going to look. Been doing this 14 years. I know the deal. So those of you who've and you know what? You don't watch something and academically then know what to do. Which is why Tim and I and the other admins in the group will get a little frustrated when you start adding to something that we haven't even taught yet. Because the way you get consistency in the long term to where you could trade it in, trade it out. These guys used to post all these cell phone pictures of their trading stations, and all of a sudden you don't see them posting. Or they post once every 4 months. What happened during those 4 months? Why aren't you posting all the trades that didn't work? Why aren't you posting all the count blows and drawdowns 50%? You're only posting the stuff that works, right? You don't learn how to trade. Did we just lose the picture? Test, test. Test, test. Test, test. Okay. You don't learn how to trade by getting it right. That's luck. You learn how to trade by putting it out there and getting it wrong and now learning what not to do. You are Thomas Edison. You will say, I know 10,000 ways how not to draw pitchforks. Edison was 10,000. I know 10,000 ways how not to invent the light bulb. Good question. Real good question. How many touches for it to be considered a good fork? It's not so much tradable, it's the kind of touches that you get. Ideally, the ideal touch, okay, so everybody kind of get where we're going with this. Notice the concept of this manual stop loss. This is at trade entry. All right. So we have a manual stop loss, and then we have a system stop loss, a trading station stop loss. The manual stop loss is going to be tight. The trading stop loss is going to be a little further back. And we're not going to execute. We're not going to get taken out by that trade. That's why it's called an emergency stop loss. No, it's not about the trend. It's about the swing low, swing high. So go back to the previous sections, or you got to get to the course. If you haven't been to the course yet, you got to go through the course. So the ideal touch, okay, I mean, maybe you want to take a screenshot of this so you don't forget it. Yeah, we did lose audio and picture for 1/10 of a second. I don't know what happened. It's back. Well, you won't see many posts with losses in our group because if there's a loss, it's a mental thing. It's not a technical thing. And they know it. But you're not going to see technical losses here that are big and worthwhile and meaningful. And we'll, again, we've gone over already. We haven't got to the numbers yet. Need about another hour, and I can't do that. All right, so we had a question. I want to answer the question. It's a question about the touches. So a good fork has somewhere in there some level of precision. Now guess what? If I have a traditional fork and I've just drawn it here, it's tradable. The very first touch, it's tradable. I would rather, if I just got on the chart here in time, I would rather go back and look at this channel and try and draw a traditional or a best fit on the channel. So the first bounce after I get on the charts, again, this white line represents when I get on charts. I'd rather have some forks with touches in front of me, so the very first bounce here I can take a trade on with confidence. Now, what do those bounces in front of this look like? They look like this. I have one with great to the pip touch here, and somewhere along the line, maybe come out, there's a to the pip touch there. That would be a great fork, because we have what I call inside-outside confirmation. Another look, and I'll draw this one in yellow, might be where we have a touch down here that's to the pip, and it doesn't seem like in this, just we might see some consolidation, but we don't have any real perfect touches. And then it goes up here and we have a to the pip wick, again nice long wick, and then pulls away. So these, the better these are wicks, scouter wicks versus just a little tiny 1 pip wick, the better off that pitchfork is going to be validated. So typically we want 2 good hits. Oops, yellow. We want 2 good hits on any combination of these 3 lines. The better distribution is at least 2 separate lines. A hit down here followed by another hit down here does not necessarily mean the median's going to be validated and the top line is going to be validated. But if I get a median hit, as I drew it here, and an outside touch like I had here, that's a good fork. We could trade that. If I get an outside hit here, nothing in the middle just yet, but I get an outside pip to the pip hit here, that's a good fork. But what isn't a good fork, and I'll draw it in front of all this, is where I have something that's a little bit short here, and it's a little bit past it here, and it comes down and it breaches it here. It generally holds the channel, but this isn't tradable with precision. So when I finally get a bounce down here, I can't count on that to the pip bounce because it hasn't even shown me it's there yet. Now again, I have to be the educator and not the investment advisor. If we're trying to trade with a 10 pip stop loss and we're going to put this line outside here, let's say on a 10, 15 up to 30 minute chart, and I have to the pip touches, and this channel is not overly large for a 30-minute chart. In other words, I'm trading real swings, real 30-minute swings. This line out here could be 3 pips on the other side of the parallel, which means when we get down to the execution, we want to see the touch and a 2 pip pullback from that touch, which means we actually are using a 5 pip stop loss. We've calculated our 2% on 10. we're using a 5 pip stop loss, which means if it overruns our manual stop loss and we take ourselves out, we've lost 5 pips or 1%. It's pretty cool the way we do this. So when we only lose 1%. But when the trade goes, we're making 2% every 10 pips. It's really hard to draw down a new paradigm account 5, 6, 7%. It's really hard because that means you would have had to have lost 7 minus 1% in a row. It doesn't happen. If you follow the system, it doesn't happen. Yeah, look on the steep moves. Our natural inclination is to even the pitchfork out a little. I would say keep both. Keep that one fork there, and then draw your best fit at a lower level. And again, we haven't got to shift forks or modified shift. We'll get to those in the next few weeks. To the pip means it's hitting that line. You cannot see space between the candle top and the line, and you don't see the wick going past the line. If I have a blue candle, I don't see it go through the red. If I see a little bit of blue on the other side, that's not to the pip. Now let me come back to what I was saying. You can trade this sloppy fork where we've had shortages, it wasn't real good hits here, and we breached it here. You could trade that, and we'll get into this Monday. You can trade that. You're just going to have a bigger stop loss. And that's okay. I'm describing ideal. Remember, I can't, as an educator, come in here and tell you 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 steps, and this is it. This is what you must do, because that's considered investment advice. I have to tell you, trading with a tight fork, and I could put my trailing, if you want to call it a trailing stop, it's not trailing price, but it's just trailing the pitchfork. If I want to put my trend line stop loss, my manual stop loss, I can put it 3 pips outside the fork, so when I have a 2 pip pullback off my bounce, the most I'm exposing is 5 pips. Which would be 1% of my account if I put 2% into a 10 pip stop loss. If these breaches go 3, 4, 5 pips, I do the same thing. It's just my line has to be farther out. I have to cover that line. And so maybe, in this particular trade, again, this might be a 30-minute trade, it might be a 60-minute. In this particular trade, maybe because I've had such breaches, even though the fork is holding the channel pretty good, maybe I have to put my 2% into a 20 pip stop loss. And I have my line, 10 pips out to cover a 5 pip breach, to cover a 7 pip breach. Still, if it does take me out at that distance, I'm only down 1% because I put my 2% into a 20 pip stop loss. The difference here is I have to go 20 pips to make 10%. 2%, whereas over here with the 2% and a 10, I make 2% every 10 pips. So this fork where I have a 20 pip stop loss calculated versus a 10 pip, I will make 1/2 the profit. But I'm still making good profit. It's just the old guy trading, the old paradigm trader who sets his stop loss as 100, now making 5 times his profit, whereas over here I was making 10 times his profit. So you can trade forks that aren't perfect. You just have to open your stop a little as you calculate the lots you put into the trade. If you guys haven't been through the course yet, you need to go through the course. Yeah, I'm probably going to go 3 days in the next 10 to 14 days. All right, now you're getting into the rest of it. I can't go into money management. I don't have time to talk about that tonight. We almost got there. We're almost there. It's been pretty quick movement. Now, I want to point out if you didn't notice, um, I posted a trade, um, not by me, because I'm more interested in what I could post good forks, but that's not as significant as posting other trades. I posted, I've shared several times some of Tim's trades, and this is one here. Let me find it. Give me 1 second. Where am I? Over here. Um, oh, yeah. Get to the directory. So this was a trade that one of the students, one of you guys, this is Alexander, I don't know if anybody of you know, all this takes place in the group, in our group, and I'm about to put up that information. Let me just share this trade to wind it down for today. So this is a trader who wasn't trading pitchforks until we started these sessions. We're only, our first full 2 weeks into this session. And there's so much going on with this fork and this scan that makes just incredible understanding of what's going on. He's got a scan PRZ. There's a fork was here, and there's a nice touch here, an anti-fork touch. It came back and tested this line. So there's a trend line right there. See, that was the start of this fork. There's a trend line right here. If I could draw straight. And the price bounced off that line. And then it came down, and what you'll notice as you start drawing more and more forks is this touch here. And then this touch here. Now I'm beautifully set up for this thing. I've got my fork on here, and these are all the kind of super touches. This is a super touch. Why? Remember, I started the session talking about that being a super touch, because price broke the median and it came right back and checked it to the pip and rejected it and then continued on. Any good support line or resistance line will do that. When price breaks it, it'll come back and check it and then leave. That is incredibly powerful in combination with this. Tells me those two lines are pretty special. And then it left it and it came down here. Now you've got a visualization. Because all I have to do is copy that parallel line to those touches. Copy that top line. And now I've got a line down here I can put on this swing low, and it goes right there and gets that bounce. I've got my pitchfork. I set it based on good touches. See, the thing is, what everybody's trying to do is set the fork here and see all these miracle touches. And what I said the other day is this becomes a hot zone, and I could use the fork to help establish that hot zone, that scan. Now, he didn't have it as a scan there, but these are swings that he saw. When the scan paints, Now the swings become part of the scan. But that swing low was there. That swing high was there. That trend line is seen. When you do it enough, you'll see that trend line. This swing low was here. This swing high here. Again, trend line. Do a 50%, you should be able to see the pull down and go back up and check it. So the fork gets drawn by these swings. And it's just to see what happens afterwards. So we draw the fork. Somewhere up in here, the pattern shows up on the scanner. We copy it here. Oh, look at that. B, right on the pitchfork. There's some other things about this chart that I won't talk about because he didn't do in the drawing. But remember, we have horizontal Fibonacci based on this fork Fibo. Based on the fork Fibo here, 100% retracement going up. And we also have warning lines going out this way to create synergy points or energy points. But look how this nailed the scan entry at the pitchfork hit. Oh no, it doesn't have to stay in the fork. That's what, watch last week's session, or excuse me, watch Monday's session when they get it up there. Oh, one side comment, guys. Educators don't record the sessions. Educators don't post it. That's all automatic technology. So, when that gets posted, I have no control over. It's not me. It's not a function of me. And it's not a function of, Justin or Christopher or, the Forex chicks or Jed or anybody else. It's done for us automatically. So we don't control it. So no anger towards the educator. I wish they'd get that recording up. We don't have any control over it. Wirecast, there's some programming into Wirecast. It automatically records the session and they generate the page. All right. So yeah, watch Monday's session because we talk about using the fork, the scan to help draw the fork to give us potential moves afterwards. So here, not only can we use it to catch the D move, but if the D move fails or it's short, price may continue in this up channel. And I guarantee you, with this fork, I'm going to track this. I guarantee you, as it falls down, it'll fall down in compliance with this fork. These will be warning lines. These will be projection lines this way. Somebody asked, what's an energy point? It's when I have two of these lines intersect in a diagonal and a horizontal line. It may be on the fork itself. I may have a Fibo in here. This move is down. The 61.8 comes across from that move. We may see a bounce right off that 61.8 coming back down. It might not bounce again until 2618 up here. 3618. Way outside the fork. There's a trade. Boom. And that's a big trade because those are big pips. So just stay with me, please. Don't be discouraged because this seems overwhelming. It is not rocket science. And let me tell you something here. I'm going to bring a little bit of scariness to the situation. There's nothing I'm teaching. Uptrend, buying bottoms. Downtrend, selling tops. Trend line touches, support and resistance touches. Oh, it passes through it. It always likes to come back and check it. I'd say 90% of the time, it likes to come back and check it. Blah, blah, blah. All that stuff, if that's overwhelming to you, you're going to have to know it for anything else you're going to do in the Forex. You have to know it for anything else. So we're not learning something specific here. The only thing we're doing specifics is putting it all together and then doing simple math that other people haven't figured out. We have no need to participate in drawdowns. We have technology that tells us what's going on. We don't have lagging indicators. Okay. Any questions about anything we covered tonight? All right, good question. Some of you came in late. Right there, take a screenshot. That tells you where the Facebook group is. In that Facebook group, in the pinned post, there's several videos. They'll help you understand risk. They'll help you understand the new paradigm. There's the link to our Telegram Telegram channel. That'll become more active as time goes on. That's in the pinned post at the group, along with group rules. The Pitchfork course is right here. You're going to have to register. You'll get a confirmation email. It gives you the link to the course. You're going to need this login and this password. It is case sensitive. And I've put this slide up how many times, guys? How many times have I given out this group name? Every session so far. How many times I've given out the course URL? Every session so far, of which there's at least 5 recordings. So if you've come in here, I love it that you're here. You need to go back and watch those 5 sessions. Schedule it. Get through it. It'll get you up to speed. Ask questions in this group. Post pitchforks in this group. So here's the deal. Who wants to be ready to actually trade pitchforks Tuesday? Because I'm going to give you the rest of the entry money management Monday night. Who's ready? All right, if you think you're ready, Tim and Stephen and Theo and Zoe and I want to see about 5 to 10 pitchforks from you before Tuesday. Because you guys don't have it 100% down yet. Let's get your forks right before we start trading them. Let's get the forks right before you start trading them. Because even though I'm going to tell you, start out on demo accounts, I know some of you are going to go right away and try and trade live accounts on it. You'll get there, Fortunate. I'm sorry, it scrolled too fast. Monday, in part of showing you the money management, I will use the calculator and I'll make it available sometime on Monday, either before the class or immediately after the class. But you want to get in here and do these so you know you got them right. This doesn't take long to master. You just have to start drawing them. Bring them in. We've already seen people bring them in and correct the mistakes. And subsequent forks, it's maybe 1 or 2 more, but the mistakes are starting to go away. For the most part, the people that started with me from the beginning, in just 2 weeks, are drawing pretty good pitchforks, pretty good best fits. Tonight, we went over a little bit about what is and isn't a good fork. And it doesn't mean it's non-tradable if you have breaches. It just means you have to trade it with a bigger stop loss. Still tradable. There you go. That's the way to say it. Make your mistakes in the group so you can profit later. This is the fastest it's gone, Zoe. I don't know. It's crisp, it's clean, and it's fast. You know how I know it's fast? Because I have a monitor. I don't mean like a monitor. I mean a monitoring station. And so I put the broadcast out. You guys get it. And I'm simultaneously downloading the same thing you get. So I'm going both ways with bandwidth. So if anybody, I'm going to be the slowest. But tonight, it's almost like I'm on GoToWebinar. It's clear and it's super fast. So I don't know what's going on, but wow, I like what I see. I have so much on the agenda. Let me tell you what's coming down the road. One, we have to have an honest discussion about the web scanner and its limitations as a trading chart. Okay? I have no personal investment other than your success. But I just, again, as an educator, I want you to know the limitations of it compared to trading on TradingView charts. Okay. I want to talk about some other points of confirmation. We're going to spend lots of time on awesome money management. And then I'm going to give you guys some insane support and resistance the same way I gave you the pitchfork course. I'm going to give you some support and resistance that maybe less than 1% of traders know about, nonetheless use, which is very powerful. So now you'll have a pitchfork and a Fibo line and one of my special support and resistance lines all merged into one 2-pip zone, and price comes up and hits it. Ooh la la. But that's only going to work for the people that are on TradingView. I can't make it work on the web-based scanner, and I'm never going to support MT4. No, the only person I knew, and that knew me coming into IML was Christopher Terry. I don't know. I don't personally know the other educators. Yeah, there's one of them. Thank you, Daniel. Oh, that's all for the next several classes. The next class, I want to do the entry and money management so those who are ready can actually start demo trading. All right, I got to shut it down. No, I did not teach Christopher Terry. Christopher Terry has about 5 to 7 years more trading than I do. We just ran in some of the same circles. See, there are certain traders that get away with certain things. Chris, I would call an old paradigm trader, but he trades certain things that most people would need additional technology or a dozen years to trade. He knows market geometry. He can see market geometry like I can see pitchforks. And we're going to get into a little market geometry here, especially for our entries. And you're going to be blown away. But got to run. You guys have a life to live, and you're scheduled for an hour, and I'm an hour and 40 minutes, so I'm way over. It's our last session of the week. Look, review the sessions. If you're brand new, try and get through that course. Start posting your trades. If you're brand new and you haven't been with us before, get in this Facebook group. That's the quickest way to learn. Oh my God, you won't be able to go through all of the forks that have already been posted before Monday. That's what I love about this group is you guys are very active in posting. We're having a hard time keeping up. Right? But you can go in there and look at the forks, see what people posted, see what the corrections were, and you can super accelerate. You have your teammates, your fellow traders in this group to thank if you're late because you will accelerate faster than they did because you already have hundreds of forks to look at. But that feedback is vital because my personal opinion, it's hard to learn just on your own. And videos by themselves aren't going to do it. You need to trade it. You need to post it. You need to get correct on it, because you learn by fixing your mistakes. You don't learn by getting it right. Join this group. This is our main communication thing. Set notifications on. Put them to top of your RSS feed. Know what's going on in this group. It'll make you a successful trader. I'm going to blow you guys away. I'm going to show you some stuff in terms of the money you can make. I'll put my disclaimers out there. But when you see what you can do as a new paradigm trader, it's really going to blow you away. All right, I'm going to call it a night. Listen, every day, every week, in our friend pool, your friend pool, my friend pool, we see tragedy. Oh my God, I just heard on tonight, there was a nursing home in Florida, and I don't know what the conditions were, but apparently they didn't have the air conditioning. I don't know what the deal was with windows or whatever else. 8 people died in the nursing home. That's insane. Could have been one of our parents or grandparents. Motorcycle wrecks, car accidents, everything else. Life can be short. Life can be short. So for those people you care and love, let them know you care and love them. You never know, it might be your last time talking to them. So I love you guys. I'll see you on Monday. Have a great and safe weekend.